Hi, this is Tim Bost with FinancialCyclesWeekly.com, and we want to talk today about the profits you can make by using solar eclipses as trading triggers in the stock market. You know, I've done lots of publications and have worked with many areas of financial astrology in the past, but the one that I have found to be among the most rewarding is the study of solar eclipses and their impact on the market. In December of 2009, we published the Solar Eclipse of January 2010, its impact on the markets, which illustrated some of the ways that you can use the power of solar eclipses to make more money in the stock market. We wanted to take a moment to look at one of the stocks featured in that eclipse report for January 2010, the A.O. Smith Corporation. This was one of 6 stocks we identified in that report as a potential trading candidate following the solar eclipse that occurred in January. We outlined these 4 simple steps as a part of our eclipse trading strategy. First, we planned to enter a long position in this stock within a couple of weeks immediately following the solar eclipse on January 15th. Secondly, we wanted to consider any price pullbacks during that time as buying opportunities, particularly if they coincided with planetary support in our charting for the stock. Third, our plan was to trail a stop if the trade turned profitable. And finally, we plan to reevaluate the trade around the 12th to 14th of April, which is when we got the sun's conjunction with the 2 eclipse midpoint and the sun's square to the eclipse point for the January 15th eclipse. So this was a sensitive area we knew in advance that would be coming up for our trades, and we wanted to reevaluate at that point. So these were our 4 steps. This is what A.O. Smith, AOS, it's not a glamorous company. They manufacture and sell water heating equipment and electric motors. Not in the news a lot, but we identified them astrologically as a key trading candidate. And at the end of the trading day on the 15th of January for the solar eclipse, the stock closed at $43.94. A week later, on January 22nd, it closed at $42.94. It had begun to pull back a little bit at that point, but we were interested in looking for planetary support as well. And on this chart, we have the blue lines representing the places where Jupiter is in the sky, and the red lines for Mars. And we're looking closely at those lines. So it was on January 28th that we got a clear signal. The stock had gone down and found support right on the Jupiter line, then bounced back off of that. So this was our signal with a close on January 28th, back above that line. We wanted to enter the trade on the next trading day. And this is what trading looked like. Actually, the stock traded down a little bit that day, and we were able to come up with an entry position at $42.75 on the 29th of January. On the same trading day, we wanted to set an immediate stop-loss level, which we put in at $38.71. Now, moving forward here to February 5th, we did in fact begin to see that downturn, so we left the trade in place on February 5th. On February 12th, however, we saw at that point that the stock had bounced back up quite nicely, and in fact, we were in the black on the trade at that point. At that point, we went ahead and moved our stop loss level up to 41.09, putting it between these planetary price lines to find some support in that zone. So moving ahead from that point then, the stock continued to rise, and on the 19th of February, we raised our stop to 43.09 and actually began to lock in some profits on the trade. As you can see, by the 5th of March, the stock had continued to rise, was closed that day at $47.78, and concurrent with that, then we raised our stop again to trail it up to $44.29, locking in more profits on the trade. Of course, things didn't stop there. On the 19th of March, the stock was trading at $49.14, and we brought it up just under this congestion area, put our stop at $46.97. Then the stock gapped up fairly dramatically. By the 1st of April, it had closed at $52.52, a very strong performance for this stock, and we decided to move our stop loss level up into the gap and set that at $50.39. On April the 12th, the stock closed at $54.28, and it was beginning to look a little bit toppy at this point. The important thing about the 12th of April April was this was the date we had picked in advance as a time to reevaluate our position in this stock, and that's what we did. So we wanted to tighten up our stop considerably, pulled it up here to the meeting point of these planetary price lines and set it at 52.75 on the 12th of April. But then 2 days later the stock continued to move up, and on the 14th of April the close was at 56.59. We raised our stop at that point to $54, and based on that then on the 20th of April we got stopped out of the trade. The stock sold off a little bit from its high right on April 14th and then dropped fairly sharply because the stock gapped down and opened below our stop loss level. We actually sold out at 53.40 rather than at $54 where our stop was set. But this was the result of our trade. We brought the stock at 42.75 on the 29th of January, sold April 20th at 53.40, a profit of 24.9%. A position of 500 shares bought at this level would have made you $5,325. And here's the important piece. This was done in just 55 trading days, a little less than 3 months of market exposure to bring in this kind of profit. So we were very, very pleased with the way this trade turned out, and there are new profit opportunities ahead coming up after the next solar eclipse, which occurs on the 11th of July. Again, our point here is that you can use the power of solar eclipses to make more money in the stock market if you know which specific stocks to look at and how to do the timing with the eclipses. This is part of what we cover in the new monograph, The Solar Eclipse of July 2010, its impact on the markets, covering the July 11th eclipse and all of the trading opportunities with that. You'll find information at http://tinyurl.com/July Eclipse 2010 for information on the solar eclipse of July 2010, its impact on the markets. This is Tim Bost with FinancialCyclesWeekly.com. Thanks for watching.